On one hand, the US is a place where money from around the world gathers, and even for those invisible kinds of companies. Ultimately, if the substance is good, then ultimately, it's a country with a system where capital accumulates, which is why this kind of idea is possible. Korea isn't like that. In Korea, there are many regulations, and it's not really a place where capital gathers. Whereas in the US, while I was giving talks or writing books, the US talks or the intention is to bring more capital into the US market. That's it. Paradoxically, because it's a liberalized market where money can leave easily, that's why money also flows in easily. It's because since money can leave easily, there is a guarantee that whenever I invest in the US, there are no problems when it comes to withdrawing my funds. It's different from China. In China, I can make an investment, but I can't take it out. So investment as well. At first, probably, the Chinese market with those numbers, saying it's a multi-billion-dollar market. Thinking that, everyone jumped in, but our major corporations got wiped out. I saw all of that. I saw it all. Korean companies went into China and Russia, like the steel companies, building steel plants there and then coming back. They got stripped bare by China. Everyone knows that. So they aren't going in as much. And moving forward, they'll go in even less. Since it's easy to move money in and out of the US, more capital flows in. And looking at the global stock market, the total global market value, I looked this up. This might not be entirely accurate, because I didn't research it myself, but just looked it up. About 50% of the global market cap is in US stock, while the US GDP is only 25%. You see, so US stocks are just like, bam, roughly twice as much as how it's being valued, which means that in Europe, Japan, and Korea, corporate value is discounted by that much. Why is it discounted? Regardless of corporate performance, it's like an unpaved road here. Because on an unpaved road, capital moves back and forth, but there are too many regulations. That's why in the US, even more capital will flock there, if they even go as far as tokenization. That is the US's intention. So, capital will move even more. Money flows into the US, making US stocks and bonds more valuable. In a country like that, Peter Lynch's strategy works. Like at a supermarket, if I try out a product that I bought from a company no one knows about, you find the company making it and invest in it. Then eventually, it will go public, and then it goes up. But in Korea, there's no guarantee that it will actually go public. So ultimately, the market has to be large enough to discover those kinds of things. Ultimately, it's just, there is a system. But that might not be the case. So here, you need to take 3 credits. But on the other hand, I felt a bit envious and all. It's like that. But anyway, putting that aside, anyhow, it's worth reading.